half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good Monday morning. Here we go. Our top stories today: the dollar under pressure and Asian stocks trading cautiously, with traders bracing for volatility, of course, around this big week. You have U.S. presidential elections, of course, very much in focus. Now, a flurry, speaking of new polls signal a tight finish as Kamala Harris and Donald Trump blitz the swing states, making their final pitches to voters. And China takes further steps to attract global investors ahead of the U.S. elections, easing restrictions on foreign capital as top legislators meet in Beijing.
It feels like the countdown has begun for weeks now, but we are really coming down to the wire when it comes to this U.S. election. We're just about 2 days away from what could be quite volatile, and you're already seeing that volatility being priced in some of these FX markets here as we count down to that big day. So certainly there's one thing to watch. The dollar is weakening. That's probably the most noteworthy thing, just given what Dave mentioned, that some polls are suggesting maybe that Harris is having a slight win here right now. You're seeing some of these Trump trades retreating a little bit. So the dollar yields as well. You take a look at that jobs report and the reaction that we saw in the Treasury market. You know, it was the weakest print that we saw in jobs since 2020, the days of the pandemic. Treasuries rallied and then completely reversed that move. So it seems like right now it's politics outweighing the economics here, and you're starting to see that. But Japanese markets are shut, so we're not seeing Treasuries trade, but bond futures are slightly in the positive territory here this morning. You're also seeing that retreat in the dollar, in the yen as well. We're at 152 levels here. Stocks seem to be quite resilient, right? So if you're seeing where the angst is, it's mostly going to be in currency markets, not so much when you take a look at stocks. Credit, for example. Gold is also slightly retreating, but not too much as well. Interesting to know about Brent. So oil is rising after OPEC did, in fact, delay that output hike by a month. So this is the second delay that we've seen to revive supply. So certainly that's one to watch here this morning as well. But yeah, we talk about these Trump trades, right? So if you look at what everything from the steepeners to Bitcoin to the peso, to VIX futures. Guys, can we get back to that previous chart first? You're starting to see a little bit of a retreat, right? And it's interesting how people are really gaming this here right now when it comes to the Mexican peso, for example. Looked to be one of the more vulnerable sorts of trades here leading up to this election. We're trading around 20 levels here right now. JP Morgan had some interesting notes saying we might get to 22 levels if Trump is elected, 19 if Harris wins, but still saying that knee-jerk reaction is similar to what we might see in 2016, which could actually prove temporary, according to JP Morgan. But there you go. Bitcoin also retreating just a little bit. And the renminbi side of things here, that also is the currency to watch the next few days after we have seen basically yuan volatility spike up to record highs, basically, when it comes to 1 week implied vol soaring here this morning. You take a look at when it comes to how the approach to the open is looking like. Stocks, you could take a look at that. And they're not quite seeing that sort of nerves leading up to this election, right? We've actually seen futures are up here this morning. We have this NPC Standing Committee to meet here throughout the week, so we might get some details here. There seems to be this growing narrative that if Trump wins, we might see more stimulus and more upside surprises, and maybe that's why equities are still quite upbeat right now. 7-11 for the currency, Dave.
Yeah, as you point out, right, we are really starting to see, or at least feel it in markets, mostly in the currency markets so far. Not so much equity markets, which is why perhaps when we look, as we go into the trading session today, it's certainly worth noting Hong Kong, for example, coming into this week, Hong Kong stocks are down 4 straight weeks. That's the longest in about 13 months as far as the weekly streak goes. All that being said, though, the retracement hasn't been all the way back down. So that's, I think, point number one. Point number two, to Yvonne's point, there is a meeting that begins today. Let's have a look at the agenda, please, if we can. November 4th to 8th. And, of course, you look at stock volatility and you do a spread between where you are in Hong Kong against, say, the VIX. There is a slight premium there still, which I guess in many, many ways underscores, if you had to ask Hong Kong and Chinese investors what's more important, elections or any stimulus, it's probably the stimulus, which is perhaps going to give a little bit more give as far as that goes. Earnings as far as Yum China goes, but apart from that, yeah, we are on election watch.
Yep. And of course, as we talk about U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. And a flurry of new surveys has them neck and neck nationally and across the battleground states that will decide the outcome. Let's get to our Atlanta Bureau Chief, Brett Pulley. He's joining us now. It seems like this is going to be kind of at the end of the day, it comes down to some sort of photo finish, Brett. But are we likely to actually get an outcome by Wednesday, Asia time, if in fact it is, the polls suggest how tight this race is?
Well, I don't know. We'll have to see. I mean, many people expect that we very well might not have an outcome for some number of hours. Maybe Wednesday morning if, some of these swing states all really break in one direction. But I don't think that it will be terribly surprising if it takes some time, a day, 2 days, 3 days, who knows what. We expect. Certainly there are some legal challenges in place and some things in place that, depending on what the outcome is, that could delay the final certification of the vote. But we'll have to see. As you said, it is neck and neck. And here in Georgia, especially the last few days, over the weekend, the candidates have been sort of fighting down to the wire. Former President Donald Trump was here in Macon today. Vice President Kamala Harris was joined by a host of celebrities here in Atlanta on Saturday. And so, once again, Georgia, the state of Georgia, is playing a pivotal role in this election. Voters have been coming out for early voting in record numbers. Nearly 4 million people have voted already before the early voting deadline ended this past Friday. And that's out of 7.2 million active voters in the state. So the early turnout has even led some to predict that some polling places on Tuesday might be a little slower than usual.
And Brett, you mentioned, and we're looking at live pictures of Donald Trump right now, and I want to ask you about how, if at all, and we talk about how close this one looks on the surface, and I'm wondering whether the messaging or the level of urgency in both camps may have changed given that reality as we go into the final leg here.
Yeah, well, I think the numbers are so close that both candidates certainly see opportunity here in Georgia. For the former president to spend as much time as he has in recent days in Fulton County really speaks volumes. Fulton County is where the city of Atlanta is located, overwhelmingly Democratic. And but the president, the former president, I should say, I think sees an opportunity. And obviously the vice president as well. They're really, I would say the last few weeks here, the advertising has been so relentless. And a lot of it has really been relentlessly focused on male voters, black and white. It's been almost impossible for the last several weeks to watch the top-ranked University of Georgia Bulldogs football team or the NFL's resurging Atlanta Falcons. You cannot watch those games without being constantly bombarded with ads from both campaigns. So it's, clearly they have a target there. And the Atlanta Journal-Constitution, the local paper here, estimated that in just the final 7 days of the race, the two camps will spend a combined total of $24 million advertising just in the state of Georgia.
Brett, thank you so much for just getting us up to speed, really, and especially where you are, to your point there. Brett Pulley there in Atlanta for us. The other top story we're tracking, of course, here in this part of the world is the meeting, of course, that begins today in Beijing. China's top legislative body will be meeting to talk us through, and maybe we'll get more details in this massive fiscal push. It's going to be massive. Is it going to be massive? I think is the question there. Let's bring in Min Min Lo, our China correspondent, to give us a preview, really, of what to expect. The meeting starts today, ends, of course, at the end of this week.
Yeah, we're not likely to get any news until Friday, possibly by evening time. And this is really something investors have been looking forward to pretty much since September when PBOC announced those stimulus. And the market expectations had been drowned up so much. It's now, between 6 to 10 trillion yuan in additional bond issuance to tackle local government debt and to buy up idle property and land. But of course, key to watch, the wild card here is whether there will be any additional stimulus targeted targeted directly at boosting consumption that is beyond what we have heard so far around that equipment upgrading program, for instance. And when it comes to those debt issuance, what's key to watch is whether it's going to be local governments, or rather how much of it is going to be from local governments and how much from the central government. Because if it's local governments that are issuing these bonds to refinance their own off-balance sheet debt, then essentially that isn't really a fiscal expansion, right? It isn't really the same as pumping money into the economy. But if it's the central government, though, that is issuing treasury bonds, then I think that is going to be welcomed by markets. It would basically symbolize a shifting of debt burden from local governments to the central government.
In the meantime, though, even ahead of these U.S. elections, we're seeing at least curbs being at least loosened when it comes to attracting investment to the country.
Yeah. And the timing is interesting, as you said, coming just days ahead of the U.S. election, and also coming after foreign direct investment into the country has really been very lackluster over the last few quarters. So some significant loosening of rules here. Individual foreign investors can now invest as strategic investors into Chinese companies. They only need to have a minimum of $300 million, down from $500 million. They can participate in tender offers, not just private placements and transfer by agreements, and the lockup period is reduced from 3 years to 1 year. So it's quite significant here, but the question is whether it will be effective in attracting more investors into China, just given the sentiment around the economy right now.
All right, Min, thank you, Min Lo there joining us now on what to expect this week. Certainly lots of key events to watch out for. We're also watching what's going on in Korea. So you're actually seeing Korean markets up some 1% in the Kospi here right now. There is this plan from the opposition party agreeing to scrap this tax on capital gains. This is something that the president, Yoon Suk-yeol, has pledged. And a bid to really boost investor sentiment and also stock values here. So that's why you're seeing quite a bit of optimism here this morning.
Yeah, and the cost, which I think we should underscore, given the backdrop of everything else that's on the deck today. This is really standing out as the market where you are at least seeing some movement in the early goings this Monday morning. Right. In fact, just on that very note here, coming up here on the China Show, a closer look at, well, U.S.-China tensions, this relationship, this dynamic between the two as Washington gears up for a leadership transition. Tsinghua University senior fellow and retired PLA senior Colonel Zhou joining us in the next hour, along with Scott Kennedy from the CSIS. But first, and ahead of that, we talk all things fixed income strategy with Mirae Asset Global Investments on the back of that, well, aberration, question mark of a jobs report ahead of the elections as well. Counting down to the open of trade, the first sessions of the week, 17 minutes away in Shanghai, in Shenzhen, and here in Hong Kong. This is the China Show. Happy Monday morning.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7, live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Right, welcome back to shows. The Monday morning, of course, lots on deck this week, including the elections. We're coming off a jobs report. Keep in mind, Tokyo is close. We do not have trading across cash treasuries. If you missed the action on Friday, the two-year yield, as you see when the jobs report came out, and then we completely reversed all those gains as far as the treasury story goes. Effectively, some of the Trump trades on your screens, you have 10-year bond futures, you have the VIX futures, the Mexican peso, Bitcoin as well. It's worth noting the dollar is slightly on weaker footing as we get underway, of course, this massive election week. How do we trade this in terms of fixed income? Where is the value? Joining us here on set is Xinyi Sun, head of fixed income ETF portfolio management at Mirae Asset Global Investments. Good morning.
Good morning.
What do you make of that price move, the move we saw in treasuries on Friday into the close and the weekend?
I think it actually come out a bit of surprise for me as well, because I'm expecting a relatively weak job reports given the hurricane, given the strike, and it did come out quite weak.
Yep.
However, we see the market first, it's react the job rate quite on the right direction that I'm expecting.
Yep.
However, just shortly after, it's going up again. I think probably the market is still trading the Trump 2.0. Given in the recent weeks, months, we are seeing the U.S. Treasury sell off. People are worrying about fixed income market. They are pricing in the Trump 2.0 effect. But if we look at the current level, you see the 2-year, 5-year is trading at 4.2 and 10 years trading at 4.4. That is pretty attractive for fixed income investors. And if you compare to what was it trading in July, where the 2-year, 5-year is around 4.1, 4.2. But back then, the futures market, they only priced in 25 basis points. They only started to price in the 25 basis points Fed cut. But if you look at right now, Fed already did a jumbo cut. And with the weak job reports, I'm convinced that the 25 basis points Fed rate cut will come in November and December. So I think I'm quite comfortable to say that we will be seeing the yield moving down at least 15 to 25 basis points.
Was that jobs report weak enough to bring back those bets of a 50 basis point cut is one thing? Or do we have to really look at the distortions in this data and just blame it on bad weather and strikes?
I think we do see some noises from the bad weather and from the strike. And we are going to continue to see the noises even in the next job report. But I think from Fed's point of view, I think they need to employ some the two cuts on the track in order to see through the noises. Yeah. And probably in January we can see a more clear picture, more clean data.
So I think So you think they'll cut by 25 and 25, right?
Yeah.
The next meeting. So in other words, is the direction of travel and yields will drop 20 basis points first? You mentioned that, and then if Trump wins, is that the floor? Do we see yields pick up next year?
I think in terms of the path, how the yield curve will move,
right.
I think there's room to move down like 15 to 20 basis points. Okay. But how the election results, whether Trump will win or Harris will win, yep. It will probably lead to different directions. But I think we will find out quite soon this week.
So where do I favor on, in the curve now? What part can you actually trade on, given all this volatility?
I think if we're looking towards year end, I'm quite comfortable on the shorter end, the belly of the curve, given it is already at a very attractive level with the sell-off. And I think we have less uncertainty in the shorter end. But for the back end, based on the policy, I think whoever wins, they are going to issue a lot of debt. They are going to spend a lot. So that side, it will impact on the back end. But I think the surge of issuance will not likely to come within 2025. So I'm more comfortable on the shorter end of the curve.
What about opportunities in credit? Because we've seen spreads come in extremely, extremely tight. In fact, record low, I believe.
Despite Treasury selling off.
Despite Treasury selling off, yeah.
Yeah. Indeed, the credit spread is in a historically low level, but surprisingly, we are continuously seeing the inflows into USIG. I think together, although the credit spread is tight and add up on the U.S. Treasury yields, it still provides some comfortable level for some type of investors.
Okay. Beyond just the U.S., it's a big week for China with the NPC. We're expecting maybe we'll see some more stimulus on the fiscal side. How should I be looking at in position around rates right now in China?
In China rates, I think in the longer term, I still think because China now is in the easing mode, they are still going to. I think I'm still on the positive side, apart from the market predicted 6 trillion and 6 trillion local government debt swap. Yeah. I think they are going to employ different tools to support the liquidity in the market. So think the China rates will still be lower for longer, and I think the 10-year government bond towards the year end, maybe there's a little bit range bond, but if we look at longer term, I think it will go down further until lower than 2%.
I mean, there's a notion to, I'll put the two stories together, that if China succeeds in this, it becomes inflationary next year for the world. Is that a scenario that we should start discounting at this point, or is that still somewhat what is this? A mental gymnastics on my part?
I think we still need to observe more to have more like a higher level of confidence in that part. So I think this week is really important when we are seeing the result of the NPC. I think they will react depending on different election results. And if Trump wins, I think we may see more upside surprise, even on the direct consumption side.
Xinyi, thank you. Xinyi Sun, their head of fixed income ETF portfolio management at Mirae Asset Global Investments. Your pre-market in Hong Kong just opening up here right now. We're seeing some upside when it comes to stocks here in the city. We're up about 0.4%. A50 futures are still punching higher here this morning. So it looks like it could be a pretty solid open here today, and more strength coming through from the currency here as we see the greenback retreating a bit. 710 levels this morning. Plenty more ahead. This is Bloomberg.
Right, welcome back. Futures are pointing slightly higher. Your pre-market is effectively pointing to maybe slightly higher open. Just keep in mind, we're coming off we are currently on a 4-week skid as far as Hong Kong goes. Goldman Sachs has dropped this note. Kinjer Lau, of course, they do see 20% upside for Chinese stocks. I think a lot of that will depend really on what type of numbers and details we get from this meeting this week that starts today in Beijing.
Yep, their assumptions are 2 trillion yuan on that additional fiscal stimulus for this year that could be unveiled at this NPC meeting. So the policy reaction, they say, should be continual and dynamic. In terms of analyst actions to tell you about, we're watching the travel sector in particular. Air China A shares cut to a hold at Daiwa. The solar stocks have been kind of all over the place, but Longji Green raised to overweight at Morgan Stanley, and Costco Shipping A shares raised to outperform at Daiwa. In terms of stocks to watch as well, we are focusing on the travel sector, right? So there was this news that China will expand its visa waiver program to South Korea and 8 European nations, including the likes of Slovakia, Norway, Finland, Denmark. The list goes on. But you are seeing some of these travel stocks like Trip is up some 4%. It's a mixed picture, though. But then you take a look at something like Hana Travel, for example, in Korea. That one is surging here this morning. And oil stocks just really continue to rise along with the price of oil after OPEC Plus decides to delay that output hike. We've got that open coming up. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets. It is a big week in terms of events, whether it's this U.S. election that's just a few days away, to that NPC Standing Committee that is just underway this morning in Beijing. So a lot is hanging on these markets. But right now, stocks are actually doing pretty well. We're quite resilient here in the pre-market, and Hang Seng, we're up about 0.4%. And really, take a look at the trading interest in these markets, Dave. In stocks, for example, if you look at margin financing, that's up for like 14 straight days, I believe. Take a look at things like people just looking at turnover. I think it's still pretty high right now. So there's still quite a lot of activity here, despite all this volatility that we're seeing.
I mean, the fact that, we keep talking about how, let's say, the statistic today sounds more dire than it actually is. Hong Kong stocks are down for a 4th straight week. I mean, the fact that it's actually held up and not retraced all the way low, all the way back down is a good thing, right? And I think Mark Cranfield has made really efforts to emphasize that point, that this isn't one of those fake outs that we've seen in recent, these bull market, these sort of cyclical trades up amidst the bear market, right? So, and a lot will depend on what these numbers bring. there's this dance between market expectations and what the Standing Committee might come up with as far as what they approve is concerned. And it looks like this is going to be a big number. I think Goldman Sachs just dropped this note, of course, earlier on that they do expect a 20% more upside here in Chinese stocks, depending on what that looks like. Now, as far as the market open goes, we are looking at, as you can see on your screens, just about almost a broad-based rally, 0.3%. The other big story, of course, is with oil prices, 1% in Shanghai. OPEC, of course, pushing back the plans to bring more supply back into this market. This restart, as they say. Right, the open in Hong Kong is looking like this. So I think, yeah, I mean, fine, 4 straight weeks. The Hong Kong dollar is actually on the weaker end of the trading range of the last 5 weeks or so. So dollar Hong Kong is about 77. I'll be generous, 77.50 right now on the dollar Hong Kong cross. Mixed picture across some of the big names, bottom of your screens. Let's flip the boards, please. So in terms of earnings, we have Yum China on deck today. We have some news out of BYD as far as I think one of the company's executives came out over the weekend and said they did increase production. They're firing on all cylinders as far as capacity goes. 200,000 as far as the output goes. And just in case you're curious what that Ysoft, that's the stock that's traded, of course, onshore. That's this meme stock that sounds like Trump wins big in Mandarin, so we're down about 10% on that. If that is any indication of where market expectations think, of course, this election is going to go. But again, it's a coin toss.
It's always a good one to check, though, in terms of just where is the sentiment here this morning. For more, let's bring in our Asia equities reporter, Charlotte Young. She's with us here right now. There's so much suspense this week, given the U.S. election, given NPC. I mean, what are we bracing for this week?
Yeah, I think market's definitely bracing for a lot of volatility. Apparently, election the big thing, but I feel like investors for Chinese equities, particularly, are focusing more on the what kind of figure we could get from the Standing Committee of the National People's Congress. Given whatever stimulus that comes was more important for the economic recovery, and also I think the word that analysts, strategists are highlighting, such as from Goldman Sachs, is that how resilient the market so far has been holding to, amid Trump repricing. We actually didn't see a sell-off. And like you said earlier, for onshore, we're seeing the margin financing picking up to the highest level in over 2 years. And also, we also, for example, like daily turning over, we had 3 sessions last week that topped 2 trillion yuan. So I think all of that indicates that interest is still there. It just depends on what we see.
Are expectations too high going into this NPC meeting?
I think if you ask that question, I guess a week or 2 weeks before, we would say that. But after recent pullback, I think the expectations coming down a lot. And we're also hearing from investors that they're expecting, the more consumer-focused kind of efforts maybe coming later in December or next year in March. So for the upcoming one, I think people are just looking at more, measures towards, for example, the local debt swap plan, that type of thing.
Okay. Charlotte, thank you, Charlotte Young, for setting up the week for us, our Asia equities reporter, and just how important this week is really going to be for Chinese investors. Let's get a bit more perspective with Katie He, Head of Product and Strategy at ChinaAMC Hong Kong. Katie, it's great to have you here. You've been talking to clients, you've been tracking these fund flows. What do you think is going to matter more this week? Is it going to be what happens domestically with the NPC or what happens with this U.S. election?
Well, generally, we believe that the direction of the market will predominantly depend on, how the Chinese government, how much strength they put in their stimulus.
Yeah, well, I was wondering, markets have been trading on, well, for one, the major policy pivot 6 weeks ago from China. And, I mean, just this week, of course, we have expectations over what that stimulus looks like. How would you describe sentiment right now? How has that changed from your perspective? Because you speak with a lot of clients.
Yeah, so, we just had a very thrilling month there with, the policy pivot as well as, the strong momentum in the growth expectations. And I would say in general, we've seen huge reversal in interest. Having gone through a period where client sentiment has been relatively cautious, we're now seeing, a lot of inquiries around China strategies, clients willing to, looking to adjusting their strategic allocation. Ones that are kind of closing down their underweight in China, some others just simply increasing their existing allocation. And as you mentioned, amazing flow data. So we're speaking from the Hong Kong perspective.
Yep.
Just since September alone, across all China equity ETFs in Hong Kong, we've seen a cumulative of, I believe, around 2.8 billion Hong Kong dollar. And since we manage one of the largest China equity ETFs offshore, the CSIS 300 here listed in Hong Kong, that one we got over 600 million US dollar alone. So huge interest coming back. And I think, despite there's still some kind of, divergence between, views on, how the extent to which the policy stimulus will roll out. I think in general, clients are saying, the worst is behind us. So generally, quite a positive sentiment going on.
Do you view, what sort of sentiment like for clients maybe offshore? I'm just wondering, are you seeing people closing their underweight position now? Is there more confidence that maybe this is more than just some sort of tactical trade?
Yes, for sure. So some are already closing down. Some are taking their time to adjust strategically, as I mentioned. So, down the road, we do expect to see a lot more inflows coming in.
Yeah. What's the house view on the outlook in China?
Our house view is quite positive, again, in line with a lot of investors.
Right.
We believe that, the magnitude as well as the comprehensiveness of, the policy package that we see is perhaps the most significant that we've seen, for a long time. And we see really a huge commitment from the China government in addressing some of the key issues that we see in consumption, properties, as well as, equity markets. So, up to 10 trillion yuan potentially in the stimulus package. That just gives us, a lot of reassurance that the China, government is ready to do whatever it takes to revive the economy.
What about, because you guys sit in a fairly unique perspective, because you sit, of course, with the Hong Kong office, so you see flows both ways. And I'm wondering, the sentiment has been challenging up until about 6 weeks ago, the last 3 years, right? And, have you seen a lot of demand from Chinese investors onshore for non-China strategies, for example? What's that appetite been like? What are the flows been like, for example, there?
Yeah, so there has been huge, interest, predominantly driven by, the growing segment of wealth clients, affluent clients in China, who are looking to kind of diversify away from China assets and into, additional growth opportunities across the globe. And so, recent examples, we've seen huge ETF trading premiums happening in onshore China for U.S. products, for Japanese products, for example, and these are the DM strategies. On the EM side, we're seeing huge interest as well. So a lot of interest in things like India, for example, Southeast Asia.
From Chinese investors?
From Chinese investors. And that's really, been the driving force of how we kind of position ourselves in Hong Kong. We try to diversify our toolkit for clients. For example, last month we launched our India ETF in Hong Kong, and it has been, pretty well received.
What about sector themes? AI, is that still something that's big for next year?
I think a lot of the offshore investors are interested in AI, AI, clean energy, green energy strategies, more focused in China. And we've seen a lot of inquiries going into Stock Connect ETFs. As you know, we have a lot of products that are eligible under these Connect programs. So yes, growing interest.
So going into next year, so from the perspective of, I guess, where, and really who knows where markets go next year, but how are you guys planning the business in terms of product offering? What do you think is going to stick next year?
So for ChinaAMC, our growth strategy is very much centered around, building a multi-solution all-weather, solution platform for the clients. And secondly, one of our growth pillars is to really leverage, Hong Kong's positioning as a super connector to China. And so in that sense, we've been actively participating in a lot of the connectivity programs like ETF Connect, Wealth Management Connect, and as well as MRF, mutual recognition of funds. So under this narrative, right, as I said, we try to kind of build upon our existing China capability and extending that to having a lot of global exposures. At the same time, I think apart from traditional assets, we've also been branching out into alternative assets or emerging business side of things. So 2024 has been actually a very exciting year for us. So back in April, we launched Asia's first Bitcoin and Ethereum ETF, really well received amongst clients. And at the moment, we're also venturing into asset tokenization initiatives, which are led by the Hong Kong and in Hong Kong. we're very positive about the growth opportunities in the Web3 space, particularly for asset managers.
Okay. Well, Katie, let's talk again. And I'm curious to see if this bull market in China continues, how it might change flows and products as well. Thank you so much.
Thank you.
Have a great week ahead. Katie He there, Head of Product and Strategy at ChinaAMC here in Hong Kong. We're about, 10 minutes into this big week ahead. It's only 10 minutes into the session, and I feel mentally fatigued and on the edge already. 0.2% to the upside. As we were talking about, right? Turnover's really been picking up of late and has remained quite elevated. The Kospi story, in case you're curious why we're seeing that market outperform today, 1.2% to the upside. There's a conversation from the opposition party, right, that they might get rid of the capital gains tax.
Something that is more, they're aligning with the government on what the president wants to do.
Yeah.
So the fact that you have the opposition party joining in certainly is helping to lift that market here this morning. U.S. futures are doing this here right now, of course, given what we've been seeing, right? So it seems like markets kind of brushed off that jobs report. We're still focusing on some of these election and Trump trades here this morning. We're flat when it comes to S&P and NASDAQ futures this morning. The Dow Jones futures are slightly, though, in the negative side of things. This is Bloomberg.
Right, welcome back. You're watching the China Show. It's the U.S. elections, of course, literally in focus when you look at currency markets so far this week. We've been showing you this chart. I think we showed this on Friday several times this morning, but it's hard to underscore the importance really of where this goes very short term, right? So you're looking at expected vol on dollar offshore China over the next few days or so, 1 week to be more specific. That's where we are. This was right before the policy pivot around COVID-0. The 2020 elections, this was when Rona first hit, and 2015, of course, that was the boom and bust onshore markets. And as you can see, we haven't been at these levels ever onshore. So it just underscores really how much hedging, protection, insurance, speculative bets, Yvonne, are going into this part of the currency market specifically ahead of U.S. elections.
Yeah, if you're going to express it in any way, I think it was Adrian Zurcher from UBS last week says this is the best way to hedge your election risk is long dollar China in some ways. You still get the carry and the like. Certainly this is what everyone seems to be watching. Let's bring in our Bloomberg Intelligence Chief Asia FX and Rate Strategist, Stephen Chu. What are some of the gaming scenarios you're mapping out for dollar China this week?
I mean, like everybody assumes it's going to be a Trump win. So if under this scenario, obviously it's going to be very favorable for the dollar. So higher dollar Asia. Within Asian currencies, everybody's going to look at the yuan, obviously, because like all of the Trump's policy, tariff, it's all anti-China. So the yuan will be under pressure. But we also have to remember from last time when the yuan actually weakened quite substantially during the trade war, China actually helped to slow the drop. So there are better proxies out there. I mean, one obvious popular currency back then is the South Korean won.
Yes.
So actually, if you want to play like a China story under the Trump administration, number 2, then maybe like a yuan won pair could work. Or Taiwan dollar won pair could also work.
We're getting a lot of these forecasts on dollar China in the event that Trump wins, and a lot will depend on when he will impose tariffs, how China will respond. But do some of these things make sense to you? Like we get to 8, for example, on dollar China. Is that a plausible scenario over the next 6 weeks or so?
Yeah, I mean, if you want a number from me, it's really like Mark 6. It's really hard to gauge. So last time during the trade war, the yuan, offshore yuan dropped by 13% against the dollar and brought it all the way through 7. Right. But now we start from a higher base. Dollar China is already at 7. So if we had that like over 10% depreciation, we're talking about 8, as you said. But I think China is not going to entertain that. Obviously, China wouldn't mind to have a weaker yuan to sort of support the exports. But towards 8, that's just too much for China.
Okay. Yeah, and where do you think the PBOC is going to draw that line if we do see sharp moves like that here, right? Is there a level that you're watching where we could see more action from the PBOC?
I mean, right now, like 7.1, 7.20 is still all right because when we look at the basket, it's still pretty strong, actually. But of course, like upon a Trump victory, per se, if market buy the dollar, short the yuan, and all the way towards 7.4, so like near the record low that we saw like these 2 years, then maybe China will actually slow that again. Then don't be surprised if we see stronger fixings for a sustainable period, just like earlier this year.
how do we need to be looking more broadly at EMFX? So, we talk about dollar China, but, dollar Korea, for example, tariffs would not just be on China. If you go by anything that Donald Trump has said, it's going to be almost across the board on imports. Do you think there's a premium that will remain in EMFX going into this?
Yes, for sure. I mean, what happened last time is there are a lot of beneficiaries because it's all in China. So Southeast Asian currencies like Vietnam, like Thailand, so these are benefit because the reshoring of all the production bases. But obviously this time it's not just China. So Trump said that we don't know whether he can do it, but 60% tariff on China, 10 or 20% universal tariff. Now that will hurt the rest of the EM. So this time around, the beneficiary impact may be less, but it's still 60% China and 10% the rest. So there could still be marginal benefit if you look at Southeast Asia. For example, Indonesian rupiah, Thai baht could still benefit to some extent.
And what about, are you expecting anything from NPC then? Or are you focusing more on the election this week? Does the NPC have any sort of influence on dollar China?
I think it's really election because I think everybody for China is just waiting for more details for stimulus, especially the special CGB issuance. So that's sort of big in the market. It's just a number that market wants. But I think the larger impact is still the U.S. election because it matters for the next 4 years.
I'm surprised we're 48 minutes into the show now. We haven't talked about, at least in depth, on the Fed, right?
Yeah.
So you had a very soft jobs report, 12,000 jobs. Might be aberrations there because of the weather, but does it seem like the Fed can proceed with its plan to be data dependent and normalize policy agnostic of the elections? Do you think they'll cut 25 this week is what I'm trying to get
Yes,
to?
I think that's also what market is pricing as well. So 25 this week, and then probably they can hold in December to sort of gauge because right before the inauguration of the next president, they will want to hold. But next year, if things continue to soften, inflation doesn't come back, then of course they want to keep cutting. But now I think market is more fair because before, a few weeks ago, market was just insane, pricing 4 to 5 cuts this year, 6 cuts next year. Now the path is more reasonable.
All right, fantastic. Getting us warmed up for the week there. Want to watch Stephen Chu, our Chief Asia FX and Rates Strategist. And it's worth pointing out, of course, Japan is closed, so maybe liquidity might be a bit of an issue today. But the dollar is mostly weaker as we get geared up for a massive week across global markets. Stay with us. This is Bloomberg.
Thursday, the Fed decides.
Is this a Fed just dealing with debt and deficit?
It's about the election. It's about the Fed, especially at a time where you have those yields creeping higher.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We now see the risks to achieving our employment and inflation goals as roughly in balance.
We've got a statement, a decision, and a news conference.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Welcome back. Here are some of the big political stories that we're tracking for you this morning. Iran is reported to be planning a strong and complex counterattack against Israel. The Wall Street Journal cites Iranian and Arab officials saying the assault could involve more powerful warheads and may not be limited to missiles and drones. Iran's Revolutionary Guards say a new attack against Israel is certain after the supreme leader on Saturday promised a harsh retaliation. Spanish Prime Minister Pedro Sanchez had to be rushed away by security after an angry mob surrounded him and King Felipe during a visit to a region devastated by floods. Crowds started chanting, quote, murderer and hurling objects. Last week's flash floods killed more than 200 people, and frustration is growing in the coastal region of Valencia over the government's response to the disaster.
Right. For a look at markets right now, so there's elections, there's the NPC Standing Committee meeting, there's the Fed conversation, obviously. There are many ways that we've been looking, or maybe as far as the domestic perspective is concerned in China, to express their views as far as the election goes. This is one of them, in case you're just joining us right now. This is a stock that actually has nothing to do with Donald Trump, except for it sounds like Trump wins big.
Yes. So we've seen a lot of whipsaw with this stock of late, and right now it would seem like it's been tracking some of these other sort of so-called Trump trades as well, and seeing things backtrack a bit. Maybe traders are kind of losing a little bit of confidence of that Trump 2.0 win here, at least for now, as we count down to this election. But yes, you mentioned about the small caps, and certainly it's been very interesting, this note from Goldman Sachs and Kindra Lau.
Yeah.
They're putting a number on it, right? So 20% upside potentially the next 12 months if we see authorities step up measures to support the struggling economy. So expecting about 2 trillion yuan in more fiscal support for this year. And, obviously the election is going to be that big headline headwind in the next few weeks. But he says, look, tariff risk already been priced in.
It's been priced, except for, and I think he's highlighted this, Kindra and his team, in the note, that in the event we get a 20% effective tariff rate hike,
yes,
then we could see fair value in China fall by 10%. A lot of ifs there, but of course it could be offset. I think the point was by any sort of policy reaction function, which they described to be needs to be continual, dynamic, and conditional. Sounds like a diet plan, really, or a workout plan. The broad sense across these markets is we are on the up as far as price goes. So I think you look at this simply as far as the movement in price action is concerned, it mostly speaks to expectations around the NPC and not so much the U.S. election.
Yeah, that seems to be more the focus, right? That was what Katie Ho from ChinaAMC had mentioned, that this volatility might just be temporary, at least for now. And we really have only seen a lot of that sort of nerves in the FX markets, right? Dollar yuan, as you talk about. But stocks still seem to be quite resilient, which is a sign maybe that really things could stay this way for the next coming few sessions as well. Coming up the next hour, the CSIC and Tsinghua University. We got those two, Zhou and Scott Genny, joining us to talk a bit more about the U.S. elections and its impact on Beijing and Washington relations. This is Bloomberg. Welcome back to the China Show. A look at the HSI a half hour into the session. It looks like we've kind of evaporated some of the gains here, the early get-goes, but really we're still seeing some pretty resilient stocks across the board. Perhaps this is really comes down to what we're expecting out of the NPC this week, and traders really focus more on the domestic politics more than what's going on in the U.S. But the dollar weakening across the board, that certainly seems to be a bit of a tailwind here in Asia today.
Yeah, it's certainly helping. And the fact that I think when you think 6 weeks ago, and for the people that missed the initial rally, because we had no way of knowing really what the policy paper was going to be, maybe traders are looking at what could come this week out of Beijing as an opportunity to get back in and buy this dip. We're down 4 weeks in the Hong Kong markets, right? So why not, given the expectations there?
Yeah. And how strong is that policy put, really, at the end of the day, right? Is that all what matters? Is it really that $2 trillion that Goldman Sachs is expecting for them to see some 20% upside in the next 12 months? That's what they're betting on, at least for now. But in the meantime, it's really what we're seeing across FX markets, where we're seeing a lot of that angst from this U.S. election.
Yeah, I mean, definitely, right? Yuan vol is at the highest on record. This is 1 week offshore. Implied, you're looking at, of course, some of the reversals we're seeing across dollar Mexico, for example. The weakness in the U.S. dollar, and I guess in many ways, keep in mind, Japan is also shut today, so there might be liquidity issues exacerbating some of these moves. But, I mean, all that being said, right, so it looks like traders are trimming some of the dollar strength at the margin. It also doesn't help that you had that very weak jobs report that we're trying to figure out really how much weight we should be putting in that. Currently, Fed pricing after the jobs report and the Fed decision comes about a day after the U.S. elections comes, assuming we get a clear winner, U.S. elections, it's a 25 basis point cut, which is virtually fully priced at the moment.
Yeah, I think Mirae, we just had Mirae on, and they said, look, there's more confidence now after this jobs report that they're going to have to cut. 25 in November, maybe even 25 in December as well. These so-called Trump trades, we've got to check those out here, because you are seeing, along with the dollar moves to the downside, that continual move across FX markets. So, the Bitcoin, which has been sort of the big sort of trade around Trump, that's retreating a little bit. We're just around that 69, below that 69,000 level. Dollar Mexico, that certainly is the one to watch. We're seeing quite a bit of weakness there against the dollar. Well, the dollar against the Mexican peso there. I think JP Morgan said if we do see a Trump win, watch this trade go to 22. If Harris wins, could be about 19. So some big swings there. Certainly what we're watching out for is as we count down to this election is really where the polls are and what it is saying right now. U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in these opinion polls ahead of Election Day. And there's been a flurry of new surveys, have them neck and neck nationally and across the battleground states. Let's get to our Bloomberg Atlanta Bureau Chief, Brett Pulley. Brett, it looks like this is going to come down to a coin toss here, but what should we be looking out for the next 48 hours?
Oh, my goodness, you're absolutely correct. The presidential candidates are fighting down to the wire here in Georgia and across the country, especially these swing states. And it should be interesting. We've had a lot of early voting. Here in Georgia alone, over 4 million of the 7.2 million active voters have already cast their ballots. So what we'll see starting in less than 36 hours is people going to the polls for that final day. There's a lot of anxiety. Polls are extremely close. The candidates have spent the last couple of days here in Georgia, among other places. Former President Donald Trump was here in Macon on Sunday, and Vice President Kamala Harris was in Atlanta with the sort of star-studded cast of celebrities at a rally here in the city. And once again, this state is poised to play a pivotal role in the election. In 2020, this is the place where the sort of political soap opera played out, and the former president famously called and asked the Secretary of State to help find enough votes for him to win. And who knows what will happen this time?
Yeah, quite a reminder 4 years on. Brett, I was wondering if we could talk a little bit more about some of the data around the polls that came out over the weekend. And just to get a gauge, if at all that is a useful exercise, get a gauge of, momentum is on which side currently, Brett?
Well, I think a couple of the polls are indicating that some of these undecideds may be breaking more in Harris's favor. It looks like, looking at the Des Moines Register poll, looking at the New York Times poll, they both seem to, certainly where the popular vote maybe is concerned, to have Harris, a relatively negligible, 1 to 3 points ahead. And as we know, that's well within the margin of error. And it looks like just about anything can happen at this point. The candidates have been relentlessly advertising, especially here in the state. It's like you cannot turn on the Georgia Bulldogs football team, which is one of the top teams in the country, or even the resurging Atlanta Falcons in the NFL, without sort of seeing constant ads really from both candidates. And of course, I think that's an indication that they're taking aim at male voters, certainly, both black and white here in the state. In the last 7 days of the race, the Atlanta Journal-Constitution, the local paper here, estimates that the two candidates will spend a total of $24 million just on advertising in Georgia.
Brett, thank you. Brett Pulley there in Atlanta for us. Now, the elections, of course, will also be the focus for our next guests. So coming up here on shows, you do not want to miss this conversation coming up here. Tsinghua University's Zhou and CSIS Scott Kennedy joining us to effectively discuss the implications for Washington, the U.S.'s leadership transition in Washington, and what that could mean really for foreign policy, and also what it means for dynamics between Beijing and Washington. It's coming up next. This is Bloomberg.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7 live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Well, relations between the U.S. and China have faced multiple challenges in recent years, and both Republicans and Democrats are signaling a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Ingles, looks at how the U.S. election is being viewed in China's quarters of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Ingles, Bloomberg News.
Right, let's bring in our panel of guests. Zhou is a senior fellow at the Tsinghua University Center for International Security and Strategy. He is also a retired senior colonel of the People's Liberation Army.
And we also have Scott Kennedy, senior advisor and trustee chair in Chinese business and economics at the Center for Strategic and International Studies. Gentlemen, thank you so much for joining us. Senior Colonel Zhou, I wanted to start with you on given what we saw, what Steve just highlighted in that package there about Which candidate do you think China does prefer in this way? And how do you see the dynamics between Beijing and Washington change depending on who wins in this election?
Well, I've been asked so many times about the same question. I think it's right for me to say that we cannot say whoever we want to prefer because we have to bear with the result. But having said that, I think we in China are experienced in dealing with both of them because we certainly have dealt with Trump during his first presidency, and we know more or less about Harris, even if she's a vice president. I think they could have some differences, but for President Trump, what he has left is actually a kind of ideological legacy, a kind of consensus, bipartisan consensus against China. And then for Harris, she didn't say much about China, so we will have to wait and see. But I think for President Trump and President Biden, they actually hijack each other in terms of their policies toward China. Having said that, I mean, if Donald Trump is re-elected, his policy probably would look a bit like that of Joe Biden. For example, the so-called small yard high fence definitely will continue.
Scott, similar question to you. While obviously we don't know who wins, and while we don't know publicly, of course, if at all there's a preference, how do you think the approach changes in terms of foreign policy if it is Harris and also if it is Trump?
Sure. I think actually the chances for a very wide range of possibilities is quite high depending on who wins. Obviously, Kamala Harris has said during the campaign, essentially she would continue President Biden's approach of focusing on economic security issues, investing in industrial policy and high tech, et cetera. But she could become a little more focused on trade and be more ambitious to expand trade and business opportunities between the U.S. and countries around the world, including in the Asia Pacific. I think if it's Trump, it's high risk, high reward. Perhaps he's the deal maker. Perhaps they make a big deal on Taiwan or on trade issues. But there's also super high risk for China, given that he's been very clear about the likelihood to come forth with 60% tariffs. And I think small yard to large yard and high fence, if you look at the folks who are going to be around him, that'll put a lot of pressure on China and the possibility. And I think how China responds will be quite different depending on who you have in office. If it's Trump, China could decide, instead of trying to cut a deal, to push back extremely hard on Trump if he comes forth with essentially what amounts to economic war.
Joe, as Scott mentioned, it could be high fence and bigger yard if it's Trump. If we see what they have pledged, up to 60% of tariffs on China if he wins, how concerning is that in the eyes of the Chinese, and what would be the strategy moving forward if that were to happen?
Well, first of all, the question is, would he really levy the 6% tariff on China? Because according to you, Bloomberg, if we have this kind of 6% tariff increase, basically the trading between the two countries is zero. Then the question is, how possible is that? And would American consumers agree to that? Because he certainly just increased tax during his first presidency. And what is the result? The result is that American consumer would have to pay. And he has a tradition, and he even bragged about it, that he wants to look, unpredictable. So he could just have an advantage over the other negotiators. But I don't believe China would really buy this, because we have dealt with him before. And after quite a few years, China simply is better prepared. And China, psychologically speaking, is much more prepared than in dealing with him again. So I don't believe this strategy, first of all, will become a reality. But even if he tries to threaten China with economic, means, I think we're simply well prepared. I can't speak on behalf of how those economic developments in China will be dealing with this, but I believe, I'm confident that they are better prepared.
Joe, just to follow up on that, Zhou, I mean, is the view in Beijing specifically that these, and I want to get specific just so it's clear, is the view in Beijing on these semiconductor and chip restraints mainly a national security issue for the U.S., or has that view evolved into something more of an economic hit as far as China goes? Because I guess what we want to avoid is, to your point, the yard increases, for example, that this becomes more than a technological conversation and goes into things like the economy and hopefully not an outright conflict. Zhou, please.
Well, if I put myself in the shoes of the United States, I definitely understand why they want to, maintain an edge in the few areas that are still left it. But the point is that China knows that, and China simply is all out in trying to strengthen its capabilities in these areas. I talked to some experts, and know there is a gap, but even the top experts say that after 7 or 8 years, they are not so sure that the United States would still have an advantage over China in this area. So right now, the other thing is how China could actually catch up. China, of course, will have enormous investment. China definitely would like to pull talents from around the world. Because even if we just can't have help from the United States, we could buy talented people from around the world. Right now, because of China's connectivity with the rest of the world, I think this kind of flow is just natural, unless China and American relationship is totally severed, which doesn't seem to be possible at all.
Scott, I'll get you to maybe respond to that in some ways. I mean, can you tell us what more? I mean, what we saw at Trump 1.0 when those tariffs were implemented was that China didn't respond, I guess you could say, as aggressively as maybe some had thought, that they were quite maybe showing some restraint. Is that likely going to be the case this time around, you think?
I would take Zhou at his word that Beijing is much better prepared this time around, and their response would be different. They did not fight back with anything more than proportional tariffs, and this time I think they would be a lot tougher. Of course, they're going to continue, no matter what, to put massive amounts of funding and regulatory support behind a whole range of high-tech industries, like in EVs and semiconductors and many other places. But they're also ready, if needed, to push back much harder on the U.S. this time with disproportionate penalties, attacking a variety of American companies that have big business in China if there are significant Chinese or non-American alternatives, selling U.S. treasuries, perhaps devaluing the renminbi to put pressure on the U.S. and others, and courting its neighbors, European countries, Latin American countries, and Africa, with a whole bunch of market access and technology cooperation opportunities. I think that they're prepared to deal with Trump and fight fire with fire if needed. And so, of course, we'll have to wait and see what happens on Tuesday and who is elected. But I think China is getting prepared regardless of who assumes the Oval Office in January.
Well, Scott, being prepared is one thing. Going through some of the measures and implementing them is another thing altogether. That sounds like an escalation to me. Why do you think those measures are plausible at this point?
Sure. Well, I think, the first time around, I think the Chinese knew that President Trump wanted a deal and that they figured out a way to absorb those tariffs by lowering their costs, diversifying. But 60% or even higher tariffs is a lot higher. I think they're sick of being treated like a piñata and want to fight back. And they also want to see if they can reset the relationship with themselves, having more leverage. And they might think that Trump, if China pushes back, will face a lot of domestic criticism, including from Wall Street, who will tell him to cut a quick deal and get over this, and China could come out on top. And I know in talking to folks from China, I've heard that say, we can't overreact if it's Trump and he does those things, but we can't underreact. And so I think we have to be prepared for China being a little bit more forward-leaning than they were the first time around.
Zhou, well, I wanted to focus the discussion now on security, which is, of course, your expertise. And, of course, what the U.S. and its commitment to Taiwan might be moving forward after this election. Now, the former President Trump has made this very transactional. They've asked Taiwan to essentially pay for the U.S. for its defense and really avoided that whole discussion of whether they would defend Taiwan in any way, which is what we've heard from Biden several times. How do you think Beijing views a second Trump presidency? Would that actually be a positive development for its ambitions on Taiwan?
It's quite interesting for me to hear Donald Trump asking for protection. The question, of course, is whether Taiwanese would have to pay. Maybe they have to because they just need American support. But then the question is, how could any protection coming from the United States really matter to mainland China? I don't believe it would matter tremendously for two reasons. The first reason is Taiwan cannot move away. The second thing is Taiwan is on the side of the mainland China because the PLA is developing by leaps and bounds. That is a sure thing. Right now, the good thing is we are still talking about peaceful reunification. Beijing has not lost patience. So I always give people one very straightforward answer to these questions. How can we make sure that the Taiwan Strait is peaceful? My answer is just let Beijing believe that peaceful reunification is still possible. You see, we have different attitudes toward two visits. One is Nancy Pelosi's visit to Taiwan, and then Tsai Ing-wen's visit to California. So during the first one, our exercise around the island is live exercise, but the second one is an exercise without, using, live firing. It's just a simulated attack. So we know the differences, and our response is measured. So I coming back again to what I said, to let Beijing believe peaceful reunification is still possible is vitally important. It's not that the United States can protect this island. Taiwan is too small. Even if it is turned into a porcupine, then what is the use of a porcupine in front of an elephant?
All right, Zhou, please hang in there. We have plenty more to come. We're going to go to a commercial break real quick here. But that was the retired PLA senior colonel, Zhou, and senior fellow at Tsinghua University. Also, Scott Kennedy, senior advisor at the think tank CSIS. We really want you guys to hang around so we have more on this conversation. We'll have more on the China reaction here to these U.S. elections. It's a hot topic online as well. We'll tell you what's coming up in those conversations a little bit later on.
Yeah, just very quickly before we get into the break here, of course, just very, very quickly. So Korea, this is a standout market today for really idiosyncratic domestic reasons, and the opposition party agreeing to scrap this planned capital gains tax, sending equity markets higher this Monday morning, 1.5%, as you can see, 2580 on the Kospi index. Very quickly, EV stocks also very much in focus. Split the boards, please, if we can, and just give you a sense of what's going on as far as some of these Chinese makers are concerned. We're up about 5 to 10% in some cases there. BYD, conversations there around with one of the executives out in the weekend talking about how they did manage to increase their output. Plenty more ahead. This is Bloomberg. Welcome back. You're watching The China Show. Let's bring back our panel of guests as we look and approach the upcoming U.S. elections. Joining us now is Zhou, a senior fellow at the Tsinghua University Center for International Security and Strategy. He's also a retired senior colonel of the People's Liberation Army. And also joining us is Scott Kennedy, senior advisor and trustee chair in the Chinese Business and Economic at the Center for Strategic and International Studies. Gentlemen, thank you so much for sticking around. There's lots to get into still. Scott, you mentioned in the previous segment that China is a lot more prepared this time around, if indeed it is Trump 2.0. My question is, are companies, whether Chinese companies or multinationals, better prepared? In other words, where do we go with this conversation around China plus one, diversifying your supply chain exposure, given just the event risk out there?
Sure. I think actually American companies, multinationals, even Chinese companies have done a lot of adapting the last 8 years. First with the original trade war, then the pandemic, then the move into technology restrictions, and climate change. And so we've seen a lot of diversification, a variety of different, in a whole range of sectors, and also preparing for, events which nobody wants to see, some type of conflict in the Taiwan Strait. So I think you've seen companies change where they're adding new business and factories more in Southeast Asia, more in India, Central Europe, Mexico, Latin America. And it's not just American companies, it's also Chinese companies. We've looked at Taiwanese companies that are also diversifying around the world as a result of these changes. And so I don't think what you're going to see if U.S.-China relations get a lot more strained in 2025 is companies waking up and going, oh my God, what do we do? They have been adapting already, and they'll have to adapt further. Of course, there are even a few industries where companies are investing more in China, in pharmaceuticals, in consumer durables. And so it's a mixed picture. And I think companies have already been prepared for growing U.S.-China tensions for quite some time.
Zhou, we've seen China send a record 111 warplanes, I believe, across the median line separating it from Taiwan last month. We've seen drills circling the island as well. Why do you think Beijing is intensifying its military sort of activity around Taiwan at the moment?
I think that Beijing will definitely intensify its efforts around Taiwan because I have already said that Beijing believes peaceful reunification is still possible, but we're not sure about the Taiwanese authorities, starting from Tsai Ing-wen, who seems to be more measured in what we describe as separatist activities. But William Lai is more, defined than her because he actually described himself as a pragmatic Taiwanese independence worker. And we are certainly not happy with what he said during his so-called inauguration. So the point is, there is no doubt about mainland's intention to have reunification with Taiwan. The only question is it through peaceful means or is it through force? Right now, we want to remind the Taiwanese authorities that the time is on our side, and the military strength is on our side, and American protection would not really be useful or be sufficient to protect you. So we are still having patience, but we are changing the status quo. And each provocation from a Taiwanese authority would change the status quo in favor of mainland. So the space will become shrinked.
Zhou, just to also add and I want to get your thoughts on Russia and Chinese relations. And, we know if it is Donald Trump, he's maintained at least he says, maintained his relationship with Vladimir Putin. How would closer ties between, and that's a relative term, by the way, how would closer ties between the U.S. and Russia change the dynamics between Beijing and Moscow?
Well, as I have written, I believe China-Russian relationship is just like two lines in parallel. That means no matter how close they are, they won't overlap. Because if they overlap, then clearly it becomes alliance. And this is not something that China wants. And Russia also said that they do not want to have this alliance, because in an alliance, then clearly comes this question of who is the bigger brother, right? So I think this kind of rapprochement is evident there. So people are worried about this so-called unlimited friendship. But I think that is very easy to understand. If I say I want to develop my friendship with you, but then hang on for a moment, this friendship has to be limited. How would you think about it? So people should not be worried about that. I think the war in Ukraine tells precisely this relationship is not one of alliance, because China has been very careful in not providing the weaponry and other equipment to Russia, as speculated.
Zhou, Thank you so much for your insights. Retired PLA senior colonel there, and Scott Kennedy, senior advisor at CSIS, I should say. Thank you so much for both your time. You take a look when it comes to markets here this morning. You're still seeing a bit of resilience when it comes to stocks here right now. Keep in mind, Japan is shut on that holiday, so certainly maybe some of these moves are a little bit more magnified than usual. But U.S. futures are still punching a bit higher. But that dollar weakness seems to be continuing here on this Monday morning. So is that a sign of, bets are being taken off of a Trump presidency? That certainly is one thing we're tracking here this morning. But most equity sectors are actually in the green if you discount energy, which is just slightly lower here. For what traders are looking out for, let's bring in Mark Cranfield, our MLI strategist, joining us out of Singapore. Mark, how big of a week is this week, really?
Pretty big, especially when we consider the candidates involved. People, I think, are going to be looking much more at 2016 for guidance rather than 2020, simply because it's not just about the presidential vote itself, as our colleagues have been saying earlier. It's a lot of different outcomes here. You could have a president that's from one party where Congress is from the opposite side. They could both be from the same party, or it could be again split, one between Democrat, one Republican. And of course, there's pretty high odds of we're not even knowing the election results on the same day. It could drag out for several days, possibly even for several weeks. So this is why you're seeing traders pair their positioning, because they look back to a year like 2016 when the results changed quite quickly during the 24 hours after the vote, and we saw enormous swings for the major markets. So if you look at, for example, the S&P 500 futures, we went through a round trip of more than 11% between the high and the low. And I don't think there's many traders, or not many risk managers, that are going to allow their traders to sit through an 11% swing in one day. And so that's why you're seeing those moves being reduced. The Treasury market was very similar, more than 30 basis points swing in the 10-year yield in the 24-hour period as well. Those kind of things are not going to be acceptable, given we've already had some pretty high volatility in recent months anyway. So people are just being more cautious, and the outlook is really getting less and less clear as we get closer to the result. And people will know that you get plenty of time. Once the action starts to happen, typically the big moves will last for some time. So people will be hoping they can jump onto those after the results become more clear. And we're probably going to see a little bit more position clearing over the next 48 hours before we get to the results coming through on Wednesday in Asian time.
Mark, looking through the elections, I was bantering with someone on Friday, and effectively what they told me was, you guys in news do you guys. We know what you like to do in news, but us in the markets, I'm tempted to sit this one out. What matters to markets, he basically said, was where the economy will be in 6 months' time, and arguably China's a bigger part of that conversation. Mark, what do you think is going to be more consequential to markets 6 months down the road? Is it these elections, or is it what China does?
Once the dust has settled, it will be central bank policy and China stimulus, the two biggest things which we've probably been worried about the most over the past couple of months. The Federal Reserve, the path of their interest rate projections, whether they are able to cut rates as much as the market is expecting, or whether it will be less than that, and then whether China can actually achieve the targets they've put out in their stimulus measures. So whether they can really get back to 5% growth or better, and whether they can do it in a time frame that satisfies investors. That's probably the more significant thing as far as China is concerned. If they put their mind to it, and if they throw all the measures that they've been talking about, and with the PBOC also helping to stabilize equity markets as well with their measures, it's quite likely that China can achieve the growth numbers they want. But can they do it in a time which satisfies the huge amounts of investments that have gone into the country just in the past few weeks? If you look at, for example, the Hang Seng, the volatility, we're up at the highest levels we've seen in the past 3 years. And each of the two previous times when we had that much volatility, the market then declined afterwards because people were not satisfied that things were being done quickly enough. So just because we had a very good rally in September, and October was a bit of a sideways month, you could call that consolidation, that doesn't put it on a really strong footing unless the results come through in a timely manner. So that's what people are watching for in terms of China. As far as the Federal Reserve, there's definitely a possibility that they take a pause, maybe in December. And that is not factored in completely into financial markets either. So those are the two big things which will prevail regardless of what happens to the presidential vote.
Mark, great stuff. Mark Cranfield in Singapore for us. Plenty more ahead here on the show. This is Bloomberg. Right, so on top of everything we're focusing on right now, we're also looking at oil and this news on the weekend here that if you're waiting for an output hike, you probably have to wait to next year. Dan Murtaugh is with us right now to talk us through this. Dan, how much of the headline reads OPEC Plus delays the December output hike by 1 month? How much does that matter if that is a month-to-month story anyway?
Yeah, it matters a little bit, especially just in terms of sentiment. OPEC has signaled since the summer that it wants to bring some of its production back on track. Countries like Saudi Arabia need more oil revenue to meet their budgets. And so everybody knows they want to bring this back online. But at the same time, production in the U.S. is at record levels. It's growing in Guyana, Brazil, Canada. And so the market remains oversupplied, even with the sort of geopolitical risk that's rising because of the Middle East. And so prices have been pretty meh, and the worry was that OPEC would just sort of at some point or another just decide, listen, we've got to raise our output no matter what, and that could really have sent prices spiraling. But what this move does more than anything else is just sort of gives the market a little bit of confidence that okay, OPEC is more interested in keeping prices stable and keeping global inventories in check, as opposed to regaining market share. So we don't have to worry about another end of 2014 market share fight with shale.
Yeah, it's interesting, right? Because you still have the IEA saying, we might still be facing a glut next year, even if OPEC refrains from increasing supplies. You have the likes of Citigroup forecasting $60 oil now as well. So what do you think is going to be the key sort of driver for oil markets moving forward? Is it really going to come down to the supply-demand picture, or do you think it's going to be the geopolitics?
Yeah, I mean, so far that's been the big battle that's been weighing on the markets in the past couple of months, and you've seen volatility increase because of that. We're at one of the most volatile moments in months going into the market right now. So far, though, supply and demand has sort of won out. The market is just, for all the fighting between Israel and Iran that's happening now, and Iran is now promising new strikes on Israel. In a tighter market, you would really expect huge spikes out of that, but instead it's been really restrained in that points. And so what that points to is that the market's really focused on what's happening in China, both the near-term economic impact, which we might get some certainty on this week with the legislative meetings, and the long-term trends of an electrifying car fleet. They're watching the U.S. presidential election, of course, this week. I mean, there's just a lot of big events that are going on. But for the most part right now, it's supply, demand, and inventories that are leading the narrative. And that's a bad story for OPEC to tell.
Dan, thank you. Dan Murtaugh there, our Bloomberg News reporter, joining us out of Beijing. Time now for trending in China now. Look at some of the top headlines that are making the local newspapers and what's trending on social media. Now, the China Securities Journal is sounding upbeat when it comes to the consumer sector. It says existing policies focus on people's livelihoods are helping to boost consumption, giving the economy space for further recovery. Experts also tell the paper there's room for macroeconomic policies to raise people's income expectations.
Yeah, and speaking of the policy impact, same media here. So the report is that some banks have started processing applications from home loan borrowers to reprice some of those mortgages following, of course, the stimulus blitz coming out of Beijing. Now, analysts say that the new mechanism will help drive a housing market recovery. Now, as expected, the U.S. election is also being closely watched by the Chinese and is a major topic for both state publications and also on social media. To get a sense of what those discussions are like this Monday, let's bring in Min Min, our China correspondent, and let's start with this, how the election is being covered by state media.
Yeah, so far on state media, they have been really painting the U.S. elections as a very divisive issue. Xinhua, for example, had a long article just talking about all the events leading up to the election, like Trump being assassinated, or the attempted assassination of Trump, and then what they're calling a politicized courtroom. Trump being convicted of crimes and so on. And they even quoted the American Psychological Association saying that this could spell the end of American democracy. And you're seeing, narratives of a similar vein on Global Times as well, just talking about, how the race is so close that neither side is likely to want to concede the election and they might challenge the outcome of the election. And I guess the subtext here is just contrasting with the Chinese system as well, which is, of course, a lot more stable, a lot more predictable, and none of that, what the Chinese view as political violence playing out in the U.S.
So what are people on social media saying about it?
Yeah, on social media as well, there is a hashtag, U.S. elections costing more than $14.7 billion. That is trending on Chinese social media.
That's a long hashtag, though.
Yeah, well, in Chinese, it's much shorter. And people are just commenting about, okay, that's a big number. It's going to lift the GDP, right? And there are other people who say, I hope the U.S. have an election every day because it's just political theater. I'm here to watch, what's going on. Other people also saying it really doesn't matter who comes to power. They're going to be the same.
All right. Min Lo, our China correspondent, on what's going on social media and the U.S. election, as she said, trending on Weibo this morning. It's not just policymakers watching the result of this week's vote, though. Today's Big Take looks into how Wall Street is preparing for election night. Yeah, no sleep. Basically, trading floors likely to be staffed through the evening, and teams in Hong Kong and Singapore enlisted to help out their American counterparts. Subscribers can read all about it on the website, and for terminal users, the function is NI Big Take Go. Yeah, we're not going to sleep for the next 48 hours, right, Dave?
No, not at all. So, coffee up, as they say. Still ahead here on the China Show. What show is complete without a dip into luxury and maybe this permanent shift in demand? We'll talk about that story just ahead. This is Bloomberg.
Welcome back. Here are some big political stories we're following for you today. Iran is reported to be planning a strong and complex counterattack against Israel. The Wall Street Journal cites Iranian and Arab officials saying the assault could involve more powerful warheads and may not be limited to missiles and drones. Iran's Revolutionary Guards say a new attack against Israel is certain after the supreme leader on Saturday promised a harsh retaliation. Spanish Prime Minister Pedro Sanchez had to be rushed away by security after an angry mob surrounded him and King Felipe during a visit to a region devastated by floods. Crowds started chanting "murderer" and hurling objects. Last week's flash floods killed more than 200 people, and frustration is growing in the coastal region of Valencia over the government's response to the disaster.
Right, very brief look at markets, and maybe as a side note, I just noticed Valencia there. I think the record for the half marathon was set. That's a side note. Very recently, there was a race in Valencia. Anyway, that's a separate one. But yeah, I mean, 57 minutes. Superhuman effort there. There's no real pivot there from half marathon to LVMH. So let's just do it.
Well, FX is looking like this here right now. So, of course, we're seeing weakness across the board when it comes to the dollar. When it comes to what we're seeing with global luxury brands, well, they've been facing headwinds in China as consumer spending slows. And one of them is LVMH, whose 5-story flagship store for Louis Vuitton in Beijing is facing delays and slow progress. Now, it was supposed to be open in the first half, but remains fenced off today. Let's get to our Asia Global Business Managing Editor, Rachel Chang. She's here. And Rachel, we certainly heard this among some of these European earnings last week about some of the slowdown that we're seeing in China. What is the situation facing these luxury brands in the mainland now?
Right. So for most of this year, we have seen from the earnings of all the major luxury brands that the situation in China is very bad. And, I think what our reporting is suggesting really is that it's not a momentary, temporary type of blip. that the luxury brands may be able to get past in China, but could really be, what we're seeing in China is really the signs of a permanent shift away from luxury spending. And that's very challenging for the brands because they've basically, put their entire strategy into China over the last 10 years, So this building in Beijing that we've talked about in the story is so symbolic of that. It's a massive complex. LVMH has taken one building each for each of its major brands. So LV has a building, Tiffany's has a building, Dior has a building. What we're seeing is, over a year after Bernard Arnault himself visited the site, it's still covered up in boarding. We know from our reporting that, it may not open till next year, really, at the very least. And it just shows that really all of these billions of investments that luxury brands have put into China is probably not going to show the kinds of returns that they expected. And that's very chilling for these brands because really, they may not have a plan B is what we're finding out from these companies.
Yeah, and I'm wondering, just very quickly, if you could, Rachel, the major implications here for the industry as we look ahead.
Right. So, we're seeing a 15% drop for the entire Chinese demand for the industry this year, at least. And we think that will continue next year as well. So really for these luxury brands, it's about tearing up this entire strategy and looking where else in the world now should they be going for growth. And that means really coming out of China, rethinking what that China promise is, and really looking at other regions.
Rachel, fantastic. You can check out that story for Bloomberg clients and viewers on the terminal, also on the website. Rachel Chang, our business managing editor. Very quickly across these markets, it's quiet and range bound, slightly better on the equity market side, not as good for the dollar. Yields are pushing higher. South Korea is an idiosyncratic story. It's a big week, certainly, with everything from the NPC Standing Committee meeting to the U.S. elections to the Fed conversation. And we haven't even talked about other things as well on deck this week. Well, that's it from us here on The China Show. More on this tomorrow. Coming up next is Insight with Haslinda Ahmed. Stay with us. This is Bloomberg.